trade war fears have returned to Wall Street as we end the week. U.S. shares making a jittery opening after 2 days of gains. Hopes of a de-escalation in tensions between the U.S. and China have been dented by combative messages from Beijing this morning. Chinese leaders have pledged to step up support for the economy and oppose unilateral bullying. Now, on the U.S. side, President Trump has told Time magazine that there have been talks between the two sides, despite denials from China. So let's bring in David Waddell. He's the CEO and Chief Investment Strategist at Waddell & Associates in Nashville, Tennessee. David, seems like the market has found a few things not to love in President Donald Trump's recent interview with Time magazine that came out this morning. He said that it would be a total victory if the U.S. has a 20 to 50% tariff rate on other countries in a year. How is that being digested?
I think it's sort of being discounted, by the way. Good afternoon, good morning, wherever you are. Thank you for having me. So I think it's important for investors to understand that, specific on the day, there's really not much happening in terms of economic releases. There's not much happening in terms of earnings releases. There's a lot happening technically. So you mentioned that the market had risen over the past couple of days. It's actually risen over the past 3, and it's been up more than 1.5% over the past 3 days. And I think this is the reason why. There is stimulus in the pipeline in the U.S. Number one, and we've heard some of these comments from the Fed recently, we're going to get a rate cut probably in June. So there's monetary stimulus. There's also fiscal stimulus. We're going to get a tax cut sometime between now and call it the fall. And then you've got the tariff issue. So there are only 4 ways for the tariff issue to get resolved. 1, we get a trade deal. That's bullish. 1, we get tariff delays. That's bullish. 2 or 3, we end up with status quo. That's bullish. And then 4 is they ratchet up the tariffs from here, which is the comment that you just made. I think that's highly unlikely. And I think there's a disciplinarian in the market now, which is the 10-year Treasury bond and its representative, Treasury Secretary Bessent. So if you think tariffs are ratcheting up from here, then you don't want to be long this market. If you think they're likely going down from here, even if at the margin, Trump says we're having talks with China, that's suggestive that he's willing and desirous of a trade deal. At the margin, that's bullish. So I think the markets have sniffed out that there are reasons to be less pessimistic in this environment, if not outright optimistic.
All right, and one more on a different note here. We're expecting some big tech earnings next week. So what do you think that will do for where the market's headed?
Well, a lot of that is backward looking. The reason why Google's report overnight was so well received is they're continuing to project a lot of capital expenditures. And so the build out for AI continues. So the tariff noise is noise when it comes to the fact that we're seeing a generational technological upgrade across the US economy and really the world economy. And that continues unabated. So I think people are comforted that the tech companies haven't completely withdrawn their capital expenditure plans, and that's what will ultimately create the infrastructure for the AI, which will expand margins and therefore earnings. So that's the cue that people are looking for. Are they still spending with confidence? And the answer, at least from Google, is yes.
All right, David Waddell, thanks.